You won't see anything out of the ordinary in this video. Nothing but some good profit. And I guess it's nothing unusual for our team to turn some good profit during a day trading session, even the most ordinary one. And I say all this because you can do the same thing on a regular basis too. That being said, let's get down to business. First trade of the day, and we got this GBP CHF chart. The market's trading in a clear downtrend and the price is currently going down towards the day minimum. Our MACD is telling us that the volumes have been in the oversold zone for a very long time, and that tells us that the trend direction should reverse soon. And of course, we have a very clear double impulse pattern here. Here's the first impulse, then the market consolidates, and then another impulse brings the price lower. All this indicates that the market started going up, where it consolidated last time. Now that we analyze the chart, by the way, we post our every step in analyzing the market and making a trade in our Telegram community, which I recommend you subscribe to, we can finally enter the market. And we do it with a 10-minute call option. Let's see how it plays out. This is getting on my nerves a bit. The rebound point turned out to be lower than we thought. Still, patience pays off, and we see some nice green candlesticks just as we expected. Great, we do turn a profit with this one. Let's get on with it. For the next trade, we switch to AUD-CHF currency pair. Another downtrend here. The price got stuck at the trend line for a very long time, but at some point the bears managed to push through. After the price fell a bit further, it started consolidating up to the level where we expect the rebound to happen. And that's where we enter the market with a 10-minute put. And right after we enter the market, the emotional roller coaster starts for us. Because of high volatility, the price goes back and forth, a trade turning from a potential profit to a potential loss, all in the 10-minute expiration time that we chose. And finally, it ends up with us turning a loss. Well, I guess it's a good thing we know what to do. After a quick break, waiting for the volatility to come down and the news to stop affecting the market, we set off to find the next entry point. We switch to this USD-CHF pair, and right away we pinpoint the resistance levels. The first one breaks, but after coming close to the second one, the bears lose momentum, and the last candlestick casts a large shadow. Also, we notice a double impulse pattern that tells us that the price should go down until where the market consolidated last time. Following the martingale system, we double down on this 10-minute put. Let's see what happens. Just as the market reaches the second resistance, the price goes straight down to the consolidation level, and the trade turns quite a hefty profit for us. With this trade and the profit leaving us with a good result for the day, I proceed to evaluating the situation on other markets. And honestly, they didn't look good for trading. I guess it means we should call it today. Unnecessary risks is the trader's bane. It's better to follow the money and risk management rules to make a consistent profit rather than using the all-in approach. And if you would like to learn about those rules to make you consistently turn a profit, check out our Telegram channel where we also post market analysis as well as trading signals. So, check it out. And for now, stay safe and be in touch.